My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to My Trading Game Plan. Of course, I am Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. We have a lot to unpack today, folks. A lot of things over the weekend. Recently we've just heard in the last 24 hours that the DOJ is investigating the Federal Reserve, specifically Jerome Powell, over this whole building, redoing of it, and the costs involved. Ultimately, that's inconsequential. The bigger issue here is that it continues to degrade the independence of the Federal Reserve. What does that do? It's going to weaken the dollar, meaning more countries will say, hey, we don't want to use this because, again, they don't have an independent Federal Reserve, so they're going to move away from the dollar. The dollar is falling. In addition, the risk of this investigation as it degrades that independence of the Fed and the U.S. financial system is that more and more chance of the long end of the yield curve, meaning the 10, the 20, the 30-year yields, the interest rates that mortgages are based on, those could start to break out. And remember, I've talked about how we've seen a bull flag in the 10-year yield indicating a move higher. It might be on the horizon of starting. We'll talk about this and many other things. Remember, all charts, all data, no BS here at VerifiedInvesting.com. Let's get into the S&P futures. You can see, again, last night the futures opened sharply lower. This was Friday's price action right here. So we had this nice float up on Friday. It was a good rally day with a little bit of profit taking into the end of the day. But again, once things got started in the overnight and that news broke, we saw the futures cascading lower, negating the entire rally on Friday. And now we've bounced a little bit into the end of the morning session ahead of the U.S. Open here on the S&P. Just noticing this right here, you can see very clearly there's a key level of resistance on the ES futures here, the S&P futures, right around 69.70 right there. So again, you can see the low pivots, high pivot, high pivot, high pivot, and resistance. Price is getting rejected. If it breaks above there, you might get a little bit of a rally into the opening bell or at the opening bell, but watch this level on the futures for those of you that are futures traders. All right, let's flip over to the bigger time frames here. This is what matters for most of us that are investors. We remain in a tight wedge on the S&P 500. Today, we're going to be opening lower. But as of today, we wouldn't be breaking this orange trend line, at least not where the futures are trading. Remember, this zone here is getting tighter as it condenses. Price is getting squeezed. Remember, think about it like a toothpaste tube. As price gets squeezed, again, we can look at an example right here. You have wide range here. It gets tighter and tighter and tighter and gets squeezed. And then it either has a big breakout or a big collapse to the downside. That's what's going to happen here, folks. There's no doubt about it. We're going to basically, by the end of January, the markets will have to break out one way or the other. We're either going to see a surge and a rip through 7,000 to the upside on the S&P, or we're going to begin a bigger corrective move that would very likely mimic what we saw in 2021. In fact, amazingly, we're seeing that same sort of functioning on the S&P, touching that double top right there, and then the bigger sell-off would ensue. All right, could be as much as, again, a 10 to 20% decline in the S&P if this orange trend line breaks. And just to be clear on that, notice how every time we're touching the high end, we go to the low end here. If we look at that and we do a distance agreement or kind of look at that, that would be a downside move. Obviously depends on where we are, but probably around 20%. Now, of course, we're not going to go there in a straight line because the buy the dippers will keep us propped up. But ultimately, first major stop would be 6,100. That's your former major high before the March and April 2025 liberation tariff sell-off. That now becomes major support. So again, if we did fall into that, we would expect a big bounce there. Maybe back to these lows right in here. See, again, these lows right through there. And then at that point, a potential break lower. Now, listen, we could always break out. Let's be fair. Charts can do anything they want. It's all about probability, but nothing is out of the question, right? In other words, if we can really break above here, we could get that next melt up that takes us from, let's say, 7,000 or just above 7,000 where this trend line is to easily 7,500, even 8,000 in 2026. Now, personally, looking at the data and the odds, it doesn't favor that move. But as a technician, I must always be looking at both sides of the coin, right? You got to look at the side that's the most likely to occur. That's generally where I'm going to position my own portfolio. But then I also must look at the other side because I need to know my worst case scenario on those trades. All right. Into the NASDAQ. The NASDAQ, very similar. We have this longer term trend line connecting our high from 2021 before the bear market of 2022, and then also the recent all-time high here. If we continue to surge, this is your upside max target, right around 24,500 or so, right in here. On the other side, we continue to hammer in quick succession here this trend line. We're going to be opening lower again. If this breaks and confirms, the floodgates start to open. Okay, Dow Jones Industrial Average, incredible chart. Trend line going back to 2023 was support here, broke, and then look, it has now become epic resistance on the charts. This indicates, again, maybe we touch 50,000 on the Dow, but ultimately that likely could be a major top. And then look at the Russell. The Russell is almost identical to the Dow. When was the last time we heard that the Russell is identical almost to the Dow in terms of trend line hits? It is. And again, think about it. The Russell is 2,000 mid to small cap stocks, regional banks. Granted, there's a lot of banks in there, but the Dow is more the old trusty names, the Home Depots, the Walmarts, those type of players, the Apples. And again, to see a chart where the trend line is doing the same thing, like here's the trend line on the Russell, flip back to the Dow, and look, same trend line, back and forth, back and forth. It's incredible, frankly. But again, we're into resistance here that insinuates a pullback in the Russell. Now, we got to talk about this Federal Reserve stuff with the DOJ. Again, a lot of pressure being put on Powell. What this tells the world, and I said this before, it tells the world that the U.S. financial system is no longer as stable as it used to be, that whoever's in power will look to put pressure, whether it's political pressure or whether it's literally the DOJ, Department of Justice, here on these players in the Federal Reserve to do what whoever's in power wants. And that is something that will continue to degrade the US dollar. Why? Because other countries are going to say we need to diversify even more away from the US dollar and have other things. Let's say gold, right? Gold, silver, which by the way are soaring today. Let's take a look at those right now. Look at gold here, guys. Incredible move up, making a new high. Now, what we've seen here on gold, we've talked about this, right? Gold's been in this kind of tighter uptrend. And today, if we get a close basically above 45.85, you now start your advance towards 5,000. Now, you might say, well, how do you get 5,000? Is it just an arbitrary number that Gareth's picking, right? Is he just pulling this number out of a hat? Oh, it's a nice round number. Let's say 5,000. Well, let's take a look at the charts, right? And if we look at the charts and we do a parallel, let's do a parallel right here, and we put that parallel in alignment with that lowest trend line here. Look at this, guys. And we drag it up to the highs right in here. So this former high here, right? Where do you think this line is? Bring it in, bring it in. Look at this, guys. So if we're breaking here, and let's say we take a little bit of time, what's right up there? Around 5,000 to 5,100, and that would be your upside target. Now, listen, I want to be crystal clear. We are only piercing intraday this level. It could get rejected. We need to see, does it close above? Does it confirm above? All of these major factors need to be watched to see what ends up happening. But ultimately, I'm just giving you the idea that if we do close and confirm upside again, there's really nothing stopping from gold from going up another $400 or so and tagging the 5,000 even number. In fact, the way gold's been moving, that could happen in a week or two with these 100+ up days on gold. Now, silver as well. Look at this move here. Silver breached the previous high. Now it is starting to pull back. We can see if we flip to the intraday. Look at this nasty down candle here. But this is that trend line on the daily, which denotes this previous all-time high. That's what you're watching for. All right, now, if we see a close with confirmation above this trend line, the charts and probabilities start to sway heavily to the upside. In other words, the bulls would then have control again. Now, where would the target on this be? It would be around $100 per ounce. Now, why? Why $100 per ounce? Let's do our trend line here. Let's see what happens when we put a trend line here and we do a parallel up to that previous high, that former high right there. We bring this down. Look at what happens here, folks. And again, incredible to see right there. Look at how it comes up right here to $99 to $100. That would be your upside. Now, granted, in all fairness, if we get there really quickly, it's a little bit lower, right? Right here would only be $92 to $93. But again, what this would tell us that you could bounce around and still ultimately by the end of January, this trend line will be up at 100, which, by the way, we're almost at mid-January already. So we're talking like 2 weeks from now. If it took 2 weeks to get up there, then it would be at $100 essentially. Incredible. Absolutely incredible stuff on the metals, guys. And please understand, the metals are running because the U.S. financial system is essentially seeing a crumbling event, right? The degradation that continues to go on is not a good thing. And I'm going to say this. A lot of people will say, oh, well, we want a weaker dollar because, why? Well, because more people will buy stuff from the U.S. Problem is we still buy more from the rest of the world. And this is just blatant data and facts. And when you look at a dollar that goes down in value, and then you want to use that dollar to purchase a shirt from Thailand or from Vietnam or from wherever else, guess what? That cost of that shirt goes up. What about an avocado from Mexico? It goes up in price, aka a weaker dollar is going to bleed through to inflation. And I'm starting to see that if the dollar starts to break down, and let's look at the dollar here, because this is epic stuff today, folks. If we go to the US dollar, it's having a down day, right? But what we've been watching here on this bigger time frame is this trend that goes back to 2008. And we're making a bear flag above this support zone. And if this breaks, that dollar's not going to just go down a little bit. It's likely going much lower. And I'm starting to see the writing on the wall. If this happens, inflation is going to go back north of 5%, maybe even back to 7 to 10%, if, again, this occurs. And you're already seeing it playing out. Look at copper, guys. Copper's at all-time highs. Now, granted, it's into resistance at this parallel, but copper is a huge input cost for a lot of things that are being built. Silver is as well, right? I mean, there's a huge deficit in silver, and silver is used in catalytic converters and platinum and palladium and all of these other things. They are all going to trickle through to the inflation side. And so we have to be realistic about this, is that, yes, sometimes a weaker dollar is good because then, again, people will buy more from us. But it's not a one-sided event. It's not like, oh, yippee-yay, kaye, because we can get more people to buy from us. Yes, that is going to be the ultimate outcome. But in the meantime, just like other countries, like Venezuela, where their currency collapses. Now, listen, the dollar's not going to collapse. Let's be crystal clear on that. But then all of a sudden, the cost to buy anything out there is going to go up. All right, until we fully make ourselves independent. If that's the end goal, then that's a good end goal, to make ourselves fully, functional with no outside players. Granted, not what a global economy is, but until then, it's going to be hurtful for the inflation side, for our wallets. Okay, just being flat out honest here. All right, let's go through a few stocks. Before we do that, the 10-year yield, this is my big concern here, guys, is that what we're seeing here is this bull flag, right? And it keeps trying to break out. And if it breaks out, and some of this information today about this DOJ investigation can mean that yields, right? Remember, if you have other countries potentially buying U.S. debt, and we have a lot, like $7 trillion to refinance in the next year or something crazy like that, ultimately, they're going to say, the Fed's not independent. They could just print all this money. Their dollar could decrease. We're going to get back so little. In fact, we might even lose money on these investments. Granted, we'll get more dollars, but in terms of our currency, we might still lose money. We're going to demand a 7% interest rate instead of a 3 or 4% interest rate. And again, this is where it gets tricky because, again, if interest rates start breaking out, trouble generally will ensue for the overall markets. All right. Walmart today, they did a deal with Google or Alphabet for AI stuff. That stock is having a good move. The only level here I see to trade is really, if we look at this, we could be looking at something in this range. You can see right here, there's a beautiful little high pivot, And so today is a day trade at 120. I like Walmart as a potential short. All right, so that's number one. Now, Capital One Financial. This was the other big story over the weekend. The president announcing that he wants every credit card company to cap interest rates at 10%. All right, now, in theory, that sounds amazing, right? Really good for the consumer. The problem is when you cap interest rates, what are the credit card companies going to do? They're going to cancel anyone's credit card who they think there's more risk to than what 10% would cover. And so people that have great credit, they'll still get their credit cards. Anyone with medium to low credit, they will literally lose access to the credit markets, right? And so that's the issue here. Now, again, you can see it in the charts today. Capital One, which again tends to cater towards the middle lower income, that one is taking a huge hit, down about 8% this morning on the charts. Now, my guess is this doesn't go through. One thing I will say on Capital One, there's a lot of support right in here, right around this 227 level, folks. Really a nice area. It's kind of right been in there and even piercing, but look at all this sideways chop. I don't think I'll day trade this level because, again, it's already pierced it pre-market. But if we did see a bigger sell-off down to this lower 200 range, then yeah, this would be very interesting. American Express. Now, notice American Express is only down a little bit. Why? Because they cater more towards the high-end consumer. So it's only down about 3%, 3.5%. But again, this is a chart that's at all-time highs. So there's a lot of downside potential, more so if the economy weakens on that side of things. All right, quickly going to Bitcoin. Bitcoin is not rallying. And this is important, guys. I can't stress this enough. Gold is going up because the financial system is under attack. Silver, same thing. Bitcoin is not. That's not good. Now, we know Bitcoin has a bigger bear flag. And listen, I'm a huge fan longer term for Bitcoin. But I don't like the price action today. The concept that's been sold more and more is that Bitcoin is the digital gold. Now, some people will disagree with me. That's fine. But in reality, it doesn't really have a purpose. People aren't going into stores and buying things with Bitcoin, right? They're looking at other stable coins and other things like that. So you need to see, for Bitcoin to have that future, that big upside, we need to see it become more like digital gold, and it should be rallying today. Now, maybe it does by the end of the day, but right now it's not. And again, what we know from the chart is that this is a bigger bear flag. Now, listen, it hasn't triggered. It would have to break this 88,000 area here to trigger. If that happens, it's going down to probably about 70,000, give or take. Once we get down to 70, maybe high 60s, I actually think the cycle may be at a low. All right, lastly, let's quickly go through oil here. Oil, guys, it did break out and confirm last week. So we do have a breakout on oil. Oil is higher today, although struggling a little bit. We know there's tensions with Iran. Iran seeing a lot of protesters, a lot of people being killed over there. Trump has gone out and said, hey, you guys, you better stop this or we're going to go in. I don't think the markets really fully believe it, but maybe they should after Venezuela. That he could go in. And then the question is, do we see infrastructure there damaged in terms of oil? Now, just like Venezuela, they're under restriction, but then they're selling a lot of their cheap oil to places like China, right? So again, just like Venezuela was. So it'll be interesting to see. But either way, this is a breakout on oil until proven otherwise. Natural gas. Now, this one, guys, this one has seen a big fall on Friday, a big flush out. It's up a little bit today. I actually really like nat gas down here. Again, could it go down to this lower pivot? Sure. But anything in this range, to me, this vertical drop is very attractive for a swing trade long on natural gas. All right, guys. Wow, what a day. What a start to the week, folks. And don't forget, tomorrow morning we have JP Morgan reporting. Thursday morning, Taiwan Semi. By the way, I didn't even mention the other banks, Bank of America. All these other banks will be reporting this week. That's going to be fascinating. But again, I'm looking at more JPM because it's the leader. What do we hear from them? And then Taiwan Semi later this week on Thursday morning. And then next week, Netflix and a bunch of other big tech. It's going to be wild, guys. Put your seatbelts on. We will be here to guide you based on charts and probabilities at Verified Investing. As always, folks, please share this with other people. That's all I ask. Share this around. I will give you my heart and soul in these game plans. Just share it around to your friends and family if you think they're up to the task of understanding markets from a very objectionable or objective, logical stance where we focus on charts and probabilities. Have a great one. Take care. I'll talk to you soon. Bye-bye.
Previously on Crypto Combat.
The trading here will be fast, it will be high leverage, high risk. It is for entertainment. So keep that in mind.
Real leverage, real pressure, and a clock that forces decisions.
Rich or wrecked, one or the other, that's what we want to seize. Patience paid off last time for Ben.
Yeah, this isn't going to be close.
The clock is set at 45 minutes. Traders, charts are live. Let's go.
A defending champion, a rested rider, and one referee who loves chaos.
I did just get filled, so I'm in long Bitcoin.
Fast entries, fast exits, and stops that move like a heartbeat.
I might short Ethereum here. Am I allowed to do that?
All right, I just got into Jasmine short. This favors a move to the downside.
Bitcoin, altcoins, and a strategy that starts to split the room.
I was $1,000 out of the money, and this is what I love so much about this platform. It's a trailing stop, brother.
One tool, used the right way, turns chaos into control.
All right, 2 minutes left exactly.
I knew it would look bearish. What am I doing?
There's not. They do the Hail Marys down the field, but
Whatever.
When the clock hits 2 minutes, logic disappears, and instincts take the wheel.
and next week at the same time.
Watch the full episode now, because one trade can erase an hour.